Hello, this is Martin from Sikit, the channel for learning about trading and investing. Welcome to the markets next week, this weekly stock market analysis, where we look at what happened in the market during the last week and learn something from it and plan for a better trade for the next day. And this is analysis that's for the weeks that are starting from tomorrow, Monday, December 12th, 2022. Let's deep down the charts and try to see what happened. So this is the weekly charts that we're seeing of the Nifty, and right side you have the Banknifty weekly charts. So that's clearly a purish bull trap, we can say, and it's almost like a dark cloud where the close is more than 50% of the previous candle after having made an opening that is above the previous candle's close. So that's clear purishness bull trap that you see on the weekly basis for the first time after a breakout that has sustained for more than 2 weeks now. Probably more than that. So Banknifty also had been breaking out from that resistance of a rounding pattern or a wedge or a trend line resistance of any kind that we could draw here, and surprisingly and contrary to what the Nifty, it is showing a bullish green candle, and it has made a new all-time high this week, right? So but Nifty could not clear the 18,890, that kind of level, new all-time fresh all-time high that was created previous week. It could not do away with that this week. But Nifty, on the contrary, has broken out further, although it could not close with big gains. It is a solid green candle that you are seeing above the previous candle's high. Right? So that's the price action daily. That's the Friday action. Friday action is where the index had retraced the bearish candle on Nifty, while Banknifty also did some retracement, but retrieve most of that forming a hammer candle, and hammer candle on the top of a rally indicates a reversal. Most of the times, not necessarily. Only if the confirmation comes in after the price moves below the previous candle's low. So overall, on the daily basis, on the very short-term basis, on the daily charts, you can see that the Bank Nifty is still strong with a hammer on the top, but hammer on the top is having some trouble, potential trouble, not necessarily trouble. But the wick of the hammer is showing that there is still supports down there for the Bank Nifty, but Nifty is showing a solid wide range bearish candle on short-term charts. Right? So that's how it is. Let's summarize it. So what we lose, like Nifty lost 200 points last week. Banknifty gained 528 points. That's the difference. Rest is all same. So the thing is, it's still about 20 weekly emerging weekly exponential moving average. Both of the less about that. But the contradiction is that Banknifty has gained 500 points, 1.22% of a move, and Nifty lost and formed a bearish candle. It has just managed to bounce up from the 20 moving average. It just managed to close up just about that, right? Rest is all the same. We had an all-time high that was created on the Banknifty, but we could not pass the previous all-time high on the Nifty, and still in the breakout mode. It's just good problem. It could be a trap, and it's bearish indication on the Nifty, but it is still not in very bad state. But the Friday's action was really pure. It's 113 points lost, and Nifty managed to close green after it pulled back and formed a hammer. That's price action. Now, the Bollinger Bands are indicating that there is a support, the median support. It managed to close just about that, or on exactly on that zone. So it seems to be working regularly. If that still the bullish bias is there, if it close below that, then probably could have said that it is having a bearish market. But consolidation is clearly visible on the Nifty. But look at the Bank Nifty, there is no sign of any consolidation. It's expanding and rising up. So again, contradiction in the price action that can be expected from the Bollinger Band study. Right. So sideways moves may continue on the Nifty, and Bank Nifty, still not ready to close, although we have a hammer on the top. Look at this, another view on the Bank Nifty, right? We're talking about this breakout zone which had happened multiple weeks before, and it has broken out. And look at this Bank Nifty. Also, we had a, if we do a trend line, it has broken out multiple weeks back. We are in a breakout zone, so pullbacks could come in after substantial moves above the breakout, right? It has to have further energy before it can move further up. Look at the support resistance zones here. Yeah, the first support downside at 18,400 levels, which seems to be working. That's where the mounts happen. That's also confluence of support from the moving averages, and if that is now breached, then it goes back to 18,262 levels, and then have a gap support downside at 18,100. So on the Nifty we are talking about resistance upside would be producing higher 18,800 nearby levels. 18,778 would be resistance. 18,800 is a rounding number, so that resistance will be there. Then you have the all-time high at 18,887, and then rounding number 19,000, the big rounding number resistance that we look at. That's the upper resistance and the downside of the Nifty. Let's move ahead and see the Bank Nifty. What does it say? See the trend line. Just beautiful taken support at the trend line and has formed a hammer, and now the first resistance above would be the rounded number 44,000. Now that it is at 43 above levels, 800 above levels, right? And after that 44,500 rounded numbers, and that's all we can do. So we can also do one thing is to have Fibonacci extension and look at the retracements above and also find levels, but as of now, we do that in the daily analysis in the coming days, right? So right now the resistance upside is 44,000, and then clearing the previous all-time high that made on Friday, on last week basically. Downside support would be seen at 33,339, could be good support. We are seeing low, and after that you have 42,900, 43,000 would be a rounding number, so that zone would be crucial. And then you have the 42,740 levels, and then there is a gap to support at Fibonacci 38 extension. That support zone is there at 42,622 kind of level. So pullbacks could happen up to that zone. So that's nearly 2,000 points plus 1,200 points as you're talking about. So that kind of return could come in. It's very much possible because the hammer is on short term. So short term moves only you can expect. So if this hammer was on the top of weekly, then it could have been the pullbacks could be more bigger. So that's support resistance we can make out of these, and then moving ahead. Momentum, the acceleration of the downward up move. What does momentum says? Momentum last week has actually. So what you see here is a weekly charts on the left side of the Nifty and the Bank Nifty, up, down. On the right side you see the daily charts, right? The short-term charts of the Nifty and the Bank Nifty, up Nifty, down Bank Nifty. So what does it indicate? The weekly basis, nothing has happened except that there is a fall in the momentum that has happened, which is indicated by the band, but otherwise absolutely nothing. There is actually unconfirmed bullish divergence also is there, if the which could take the price back up. So absolutely nothing wrong in the medium term. It's intact from the momentum perspective. And also you can see that contrary to the Nifty, it is having a rising momentum in the bullish zones itself. So both are the bullish zones in the weekly. Now look at the short term. Short term is worth action. So it has slipped in the sideways on the Nifty, but nothing has happened in the Bank Nifty. Absolutely nothing has happened. It's still in the bullish zones on the short term also. Right. So only thing would this slip, it could easily bounce, with a few hundred points, and get back to the bullish zones again. So I know slip definitely, but it's still in the bullish zones. How about the trend indicator that you see downside? ADX is what we use, and trend indicator is actually absolutely nothing has happened on the Nifty and the Bank Nifty on the medium term, because it's still bullish and having a rising trend on both entities, Nifty and Bank Nifty. But the short term, there is a crossover of the trend to the bearish also has happened on the ADX indicator with a weak trend strength for that. Bearishness is weak. That means it's not that bearish, right? But still it's bearish. The crossover has happened in the short term on the Nifty alone, not on the Bank Nifty. That's what the trend indicator ADX and the moment indicator RSI is indicating. Let's move ahead and see the volatility. India VIX is the volatility indicator, sentiment indicator, whatever we call it. 13.47 is kind of flat moves. Only 0.5% of up moves happened last week, all day of price action, right? So it has not substantially risen, even though the market has fallen. Some pullback has happened in Nifty. The VIX is not indicating that. It's still maintaining 13.5. Contrary to what such big moves, sustainable pullbacks on the downside, then VIX would have shot up. It does not happen. I mean, that's again positive there from the volatility in VIX, India VIX perspective, right? Now, open interest is another thing. Open interest is also contrary just as the price action. On the Nifty, look at that. What's happening is short build up. It's a bearish move. It's very much visible. In the Nifty, it's short covering. Short coverings are sometimes very powerful and can break out and then take the market further to 44,000 just like that, right? So that's contrary indication of the open interest analysis. on the futures data is what we are talking about. Right? Like for the December 15th weekly expiry on the short term options data, what does it say? It's also contradictory, right? It's closer to the bearishness 0.52 put call ratio on the Nifty, while it's closer to the bullishness 0.91, to almost near to 1. That's bullishness. Closer to bullishness is what Banknifty's put call ratio is indicating. So that's option synthesis data is like kind of contrary, just like the price action is contrary. But option interest data, that is also contrary in the sense that one is pure build-up of short build-up, and other is pure build-up of short covering, which is bullish on the long side. Right? So that's volatility and option interest analysis is talking about. Let's look at the weekly levels for the December 15th expiry. Nifty is having the highest put rating that's happened at 18,600, with the call rating is at 18. Call rating is also at 18,600, so that's going to be a crucial zone. Let me just double verify. I have a small doubt if Nifty's call rating is on the. Let's quickly check that because I had taken that screenshot. See, yes, so that's right. So the highest put and call rating at the same zone. So that means what? Right. So the maximum put and call rate both are betting on this 18,600. So it's very thin rates. So the second highest is 18,000 and 18,700, but the highest put and call rating is in the Nifty. Right. Put call ratio in futures all this we already seen. Banknifty levels at 43,500 and 44,000. Right. Still you have 4 days for the expiry ahead of December 15th, and still very narrow range. So position is still there. The option traders are not going for a wide range or expecting a wide volatility. 43,500 and 40,000 is hardly 500 point of Nifty. So market, because bullish of the Bank Nifty, the option traders are betting in very close range, right? So if that goes against due to some overnight or weekend actions or events, something like that, then it could be huge short cover that may happen on the other side on the Bank Nifty, and it could be a big falls could happen. But as of now, the bullishness is still intact, is what the levels are indicating. 43,000 and 43,700 is the second highest put rating and call rating that is seen in the options for the expired December 15th on the Bank Nifty. Right. That's the levels. Call it these levels, match these levels with the levels that we already identified from the price action or the charts, basic support resistance levels, and then match them, and then try to reach a level where the most probability of reversals or breakouts, or pullbacks or supports, all this can be understood from coming to a level of support and resistance based on these two. One is option interest analysis, and second is support resistance levels from the charts. Moving ahead, the industrial sector analysis, right? Big fall happened over 6% downfall from the IT formed a wide range bearish weekly candle. This is what we say. Short term momentum has fallen into sideways, and weekly also in the sideways. So IT is no longer bullish. It is a good major resistance up there, and then it is good dependency on the Nasdaq, which also had reversed last week, with more than 3% of downfall, right? So that's reflecting in our IT sector also. And metal, moving ahead, it is a flat close. Metal is our bullish in medium term, still bullish in the medium and the medium term as well as the chart. So it's still bullish. That's one of the sector where we can still go long as per the charts. Right? We'll analyze the charts later. Auto sector is having 1.4% down. Pharma is 2.4% down. FMCG is up. That's another sector that we have. So FMCG is having a momentum bullishness in the moment in the weekly as well as the daily. So FMCG and the metal are the two sectors which are showing more strength from the momentum perspective, which is still in the bullish ones, both in the short term as well as in the weekly time frames, right? On the medium term, basically, right? So two sectors still, there is possibility of long trades, but otherwise we had a 3.5% downfall in the reality. So big fall. So reality has got a dark cloud of bearish candles on the weekly, so it can further go down or indicate the momentum is in the bearish in sideways ones, both indicate both the charts, medium term as well as the short term charts. So we have the IT 6% down, reality 3.5% down, and pharma 2.4% down, FMC and auto 1.4% down. So across the sector, fall had happened last week, but the only two sectors that is projected outside of them all is metal and FMCG, which is still having bullish elements there. from the momentum perspective. Let's look at the charts once again. Analysis IT. Look at this big resistance. Exactly the resistance zone it has taken a beating. Momentum has fallen. Taken resistance. Just hit the 60 RSI and then fallen. Reversed. Clear indication that it could further fall down to the next support zone from where it try to move up. Metal has we can see that it has fallen off the trend line earlier and then climbed back with beautiful rally, and then now it is at a very crucial all-time high kind of level, which is a confluence of a support resistance zone also. And if it breaks out from here, then it can give very good breakouts from here as well. Does not happen. There is also a probability that it can find the resistance here because it's a previous resistance zone, and zoom it can go down as well. So it's at a major crucial resistance. But otherwise, if you see metal is bullish, but you have to be very cautious on the understand we see a weekly close above this breakout zone. Weekly candle has to be seen, otherwise till but the momentum is saying it's bullish on both time frames, but price action is having some traps that could possibly play out if the entire market is also falling. But that's what that's what metal charts are saying. All these charts are the weekly, by the way. All right. Auto is facing severe resistance. You can see that, and momentum is bullish zone still. And last week also we didn't fall that back. Only 1% of fall, 1.5% of fall back has happened, and it's a cup pattern breakout on the weekly, and the momentum is still okay on the medium terms. But last week was down. So the thing is, we can go confidently long on this only after the momentum has climbed back fully in the short term bullishness, and also after this all-time high is taken out. Until then, we have trouble. So Farmers seems to have taken us about a trend bench from where it had attempted to break out. The resistance seems to be working out beautifully, is what it indicates. So momentum is sideways. We just can't do anything about that for long trades. Neither for short trades, because momentum is still not in the zones. FMCG is where the action is happening. You can see the wide range bullish candle breakout. Momentum is in the bullish zones, has been there since very long times, since months. FMCG is a defensive sector and the market is down. FMCG breaks out. It's exactly what's happening. So it's making new all-time highs. So there's a breakout from a cup pattern, momentum, and trend indicators are super bullish. And it's one of the sectors where we can bet long still, along with the metal. Reality, you can see that it has been consolidating in the sideways for more long, and then once again it has met with the resistance, and you have the cup and handle breakout that is expected, but it may take long time to do that. It may be in slow sideways momentum, and no short trade opportunities exist as of now in the reality sector. That's a summary. Index heavyweights, first HDFC Bank. It's definitely bullish, but it is at a resistance symbol. Right? Momentum trend, everything is favor, but it's at resistance. You just have to take this out and then have a solid close above that. HDFC also bullish. You have a triangular pattern, flag and pole pattern. All this is there. Breakout is very much possible. Super bullish on the momentum perspective, trend perspective. No doubt about that. Lens industry. It has been actually zigzagging in a rectangle box pattern for long after the cup handle formed, and the breakout is just not happening. There is W patterns, double top, but unless and until this all-time high zone of 2,800 is broken out, is taken out, and then the market closes above that, you still have trouble, because look at this resistance in the weekly medium term has hit the resistance, just managed to climb above this RSI 60 and then fallen. So moment resistance and price resistance took it back to the sideways price action, and you just have to watch out for that zone or the time when it is breaking out, or play it in this exact. Whenever it moves down and reaches support zone on the neckline of this pattern, just buy in, go along, and whenever it reaches the top, with a tight stop loss, and sell it, go short, basically, right? That's one way of playing that whenever market is zigzag, but otherwise momentum is inside the Reliance, right? That's the three major heavyweights. Moving on, the IT stocks are there left. The Infosys and the TCS is just like how the index indicating met with exactly resistance. The Infosys has got a gap resistance right out there, and then we have been talking about this almost for 5 weeks, and that's exactly what happened. It has been walking on this gap and then miserably failed, and we have a bearish very wide range bearish candle, and this is also resistance zones. Just trying to climb above that and close above it, managed to do that but fell into resistance, and then now momentum is sideways. I see the bank bullish stock maintains the bullishness in the medium term beautifully. Trend indicator also is bullish, but it's consolidating, it's taking its own sweet time to break out of the 1950 nearby all-time high levels, but definitely bullish as of now. Kodak Bank has been zigzagging since 2021 or more than that weeks. No, it just goes in one small range and then remains there. So exactly same thing happened last week also. Exactly at the resistance, it is going down now. So nothing much can be expected. Sideways price action. Stay out of that. Right. So that's heavyweights. Basically, the bank index is doing good. I say they also think it's on time to break out of the all-time high. IT stocks stay away, and HDFC and HDFC twins are anytime breakout zones. Lions watch out for the all-time highs. Right. So overall bullishness is there, but IT stocks, except IT stocks, bank stocks and Lions bullishness is still there, but momentum is not good enough to break out from the resistance that exists in all of these heavyweights is what it indicates. That's it. Next section that we are trying to study is how the institutions supported the markets. It was selling from their Fyers last week, 4,300 crores in the cash market. But remember, we had a buying of nearly 9,000 plus crores in the cash market for the FIs. Same FIs who had sold half of it this week, right? So the FIs are turned to sellers last week, but they have compensated almost all for that, right? 3,700 crores of buy happened by domestic institutions, mutual funds, retailers, and all this, right? So yeah, sideways funding perspective also, it is sideways participation. You can see that it's moved down to the derivatives side also, the FIDA participation. So institutions are not selling Qs, they're not selling more than 1,500. So small selling, not big selling, right? And that's why its market is sideways. And whenever the FIs are selling, DAs will come in and then buy. And this is happening. So our institutional participation is okay. Moving ahead, global markets and global commodities. Let's study the currency first. Dollar index has been cooling off, and it has found some support near the neckline of the breakout zone of the cup rounding pattern, and then taken a support there, and it's very close to 105, 4.9, and it was a 0.4% of up move that has happened after a correction of nearly 9% from the top, where the 2-decade high was reached earlier in this year, right? So now this is like it is in a sideways falling momentum, but still it is not very far from the 120, too close. It's a support zone that there is a possibility it can spike back. Now look at the currency pair USD INR. It has moved up. It also had moved up after a decent 3.5% or more of downfall. Now it has shown a solid white range bullish candle, where the momentum has climbed back into the bullish zones from the momentum perspective RSI, which is not good. 82.4 is where the rupee is weakened too. Still really bad. And every possibility is that the new all-time high can get created because it's in a trendline channel, and then it's almost heading towards the top of the channel. So that's not good. Currency is not good. The rupee weekend level, and but having the dollar to have cooled off, this much is in a way good. But we need to look at if there is a change in polarity. Bounce up could happen from here, from the support zones, or is it going to consolidate here? We have to keep a close watch on that. But as of now, yeah, rupee is still weak. Crude oil, that's where the action is happening. 11% down. Look at this. It's a channel top, channel bottom, and it is unable to move about to the channel top. And it is major breakouts. Support zone is breached at 76, and then now it is below 72, which is really good. It's in the bearish momentum. That's the only good thing that is happening is crude oil is falling, right? Well, we are a dollar purchasing country, and having the rupee at a very weak level against the dollar, the crude falling is good, right? Regardless. Now, hedging instrument, the market is going down, and greens are seeing the gold. It's a cup and handle pattern. Very slow moving instrument is what the gold is. You can patterns are beautiful. Cup and handle breakout indicates that Now, on a medium term to long term, gold is going to be rising up. It's bullish really, as per the charts, but definitely it's very slow moving and very slow moving. So right now it's in the up move and it's still not in the bullish zones, but heading high and at resistance, at a previous resistance, trying to negotiate with that, and that's making what that's nearly yeah, it's a flat close one. What happened to the gold last week, right? But at a resistance zone is what it indicates, right? Yeah, in a medium term cup and handle formation pattern. So that's gold and the currency and the crude oil, right? Moving ahead, global markets. If you look at the Dow Jones, we basically study the US markets. Dow Jones is on the left, and right you have the Nasdaq 100, the tech indicator, and broader index indicator. Downside is S&P 500. All of them are having a descending wedge pattern. Where it was at the brim of a breakout zone, it shows a reversal. It's at resistance on the momentum perspective. Also, all of them are showing now the same pattern, all having a descending pattern, very close to a support zone. But Nasdaq also, look at this, it is unable to, we were hoping that it breaks out from this. Never happened. S&P also, we were hoping that it break out would happen, but it didn't happen. So it is more than 3%, nearly 3% of downfall is what bearish wide range downfall moves. What happened? All the major US indexes, S&P 500, Dow Jones, and Nasdaq, all of them fall. Momentum is in the sideways, and all of them set resistance. That's some summary of what we. So US markets, we have to keep a close watch. If this downfall is going to be ferociously down, or is it going to be slow moving down? Right? As long as it's not ferociously down, it should be okay. Same the case if this is getting negated and we have a breakout from this, and if that breakout is ferociously up, very violently it is moving up, then obviously of course the market would reflect the same, because this is the mother market we're talking about. Otherwise it should be okay. We may be resilient, we may be decoupled, and all that price moves can happen. But overall our economy is much better than world economies, even though there is a high dependency on the US markets and the dollar, right? So that's global markets. Moving ahead, stock picks for the next week. Two actions, one on the long side, one on the short side. United Breweries. You have the Happy New Year's and Christmas and all the festive seasons are coming in, so obviously the spirits will be high. The markets, what these stocks normally do. There's a cup pattern and it is within a trend chart, and then it's almost at the top of a breakout zone. So if it's managed to close above this, then that will mean that it can really go up. So with time stop loss below the previous week's candle, we could do a long swing trade if price moves above the previous week's candle high, right? That's good risk reward if the breakout happens. So that's United Breweries Limited, right? On the short side, you have a head and shoulder pattern, which could take the give good trades on the downside on Divi's laboratories weekly charts that showing. Look at the momentum; it's bearish zones and it is resisting at the top of the at the bottom of the band of the RSI 40. Just resisting there, just trying to climb up, it didn't happen for now. So you have to trade only if there is a price that's moving below that red candle that is this week's. Only then you should make the trade, because there is divergence which could take the price back to the about the neckline zones. Its possibility is there, but that's why you just need a confirmation of that price moving below the red candle that is formed in the next week. Only then you take the trade, right? So indicators of RSI and ADX and the price action, and also the price action indicates the bearishness, and the short time swing trades could come in this DB's laboratories. Two stock picks for the next weeks. Again, another pick. It's a Nifty. It's a payoff chart of a Nifty option strategy. It's a calendar spread. It's a calendar put spread. Look at this. Downside, you're fully protected. You're not going to lose anything. The probability of profit is great, 90% nearby. RiskReward would also be good if you are exiting before the expiry date. Don't wait for the expiry date. Look at the range. As long as the market is not moving above 18,800, you just don't have to do anything. Simply sit, and then by the end of the week, another 4 days, you get how much? Per lot you get nearly 2,000 rupees. Right? So that's a kind of low risk, high probability, profitable trades of calendar spreads. You're protecting, basically you're selling a higher 18,750 put and a lower put, 18750 put and a higher put at 18850 is bought to hedge it, right? So that's how you protect yourself and then still get the benefit, right? So the capacity, depending on the capacity and the risk appetite and all that, you can manage your risk by adding more lots, right, and buying. So that's yeah, you may not like to do the adjustments. It may not be required. Adjustments may be required if there is a breakout that happens about 8 minutes. This is less likely for the next week as per this study. Yeah, let's just wrap up after having done a lot of study on different parameters, different commodities, global impacts, this that. Let's summarize it all. What happened last week? It was a pullback on the Nifty, but what is contradicting there? It's Banknifty, which is absolutely not ready to go down. Now making a new all-time high at the same time when the Nifty had made such bearish pullbacks, right? But the pullbacks could indicate that markets could do some more correction on the downside, and if Banknifty also may be pulled down to that, but that does not mean that it's a bear market. The medium-term charts is still bullish. Absolutely nothing has happened there. But 19,000 taking out may not be that easy, right? It may take some pullback, some give back before it can take out. How much time it takes, we don't know. But as of now, some more correction could be expected given that Nifty has given a bearish move as well as a slip of the momentum and all of this. So OI is also not that great. PCR of Nifty is not that great. Use index is having a reversal thing. Trend and momentum, trend has slipped and trend has crossed over in the short term. Momentum has slipped inside with Nifty. So Bollinger Bands indicates some consolidation of zigzag move. So all these indicators, some more pullback may be expected, which could take the Bank Nifty also down likely, right? If it is hesitant, then we have a story that is different. If Bank Nifty is not ready to go down, then it will lift the Nifty and then you can reach the 19K easily, right? But it's very less likely. So the view for the next week is mine, bearish view for me. Right? At the same time, I'm sure the market bullishness is still intact on the medium term. It's just a pullback. So US market is having trouble. The reversal indication is given by the candle definitely. So you have to keep a close watch of major moves as we talk later. So there's a lot of uncertainty still in the market with regard to recession fears, inflation, Fed interest hikes, and all these things that's still there. The only good thing that's happening is crude oil has fallen, but dollar has fallen, but again spiking back, and rupees still not recovered. Right? So positive thing is the VIX has cooled off. FI is not in that great selling modes. Right? And crude oil cool off, as I said earlier. So that's the positives. So levels to watch out is all that we can see as trade, right? 18,000 and 41,500 is the levels on the downside for the Nifty, and upside 19,000 and 44,000 Nifty and Bank Nifty levels. So if we need a confirmation of that the breakout is eventually going to happen, right? So protect your capital. Always hedge your positions overnight, even if the profit is less. Have focus on consistency and not losing too much and protect your capital. Right? That's only possible by managing the risk. By cutting short your position size when the market, when the VIX is rising up, and having stop losses always on hedge positions and carrying overnight. So these are all the ways, and studying support resistance apart from this risk management. Right? So the two things that we can do when you're trading as a trader to remain in the market and then consistently make profit. Right? So that's a summary view. My bearish view for the next week is what I have from the study that I had done. So if this market study and analysis has helped you in some way in your trade plan for the next day, then definitely please don't ignore and please subscribe right away and share a difference. Share a difference so maximum people get to see this, study this, understand markets from the charts. And we have very few subscriptions, so to help us motivate this, we need more subscriptions. So hope you will help in this regard. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.